Let's give a warm South African welcome, please, to Thierry Chilosi. Thank you very much indeed.
Hello, let me do a little microphone test. Yes, thank you. Thank you very much, and welcome, ladies and gentlemen. It's really a pleasure for me to be here again in South Africa. And true to form, I see that South Africa is really a vibrant place. I'm comforted by seeing a lot of colleagues and friends in the audience. And as Michael presented, the topic of my session today is going to be on future-proofing analysis global payments. It's going to be an exciting topic. It's an exciting topic for me because for once again, payments are no longer boring. There's a lot happening in the landscape. When preparing that presentation, I put together for you a little bit of a summary of everything that I hear as I travel for SWIFT and talk to people like yourselves that take decisions on running payment system, on renewing payment system, on trying to see what does the future look like and how do you deal with the current constraints. So what do I have for you in store? It's a little bit of a reflection, and looking at the agenda of the program is going to probably combine a lot of the things that you've been hearing from in these past 2 days. Before I dive into the topic, just a few comments about SWIFT. Most of you may know SWIFT. I will be showing some statistics from the SWIFT network. And to put that in context, I want to give you a bit of an idea of what is a SWIFT footprint in Africa. So if you think about this ecosystem of SWIFT, we're talking about 11,000 endpoints in the network covering the globe. 10% of those endpoints are located in Africa. So about 1,100 BICs or African BICs. Covering 54 countries and territories, 29 market infrastructures, of which 5 of them are regional payment systems. So when you look at the data, I hope that gives you a bit of a perspective of what kind of statistic we will be able to share with you. Definitely a global payment. Okay, so 3 topics I'm going to cover with you, three themes in my presentation. First of all, what's the state of play when we think about future-proofing payments? How does the landscape look like? Second, what I call game changers. I have a few of those there, and as you see these, if you want to record and have some questions, I'm happy to be able to entertain some if time allows. And finally, some of my recommendations when you looking forward, investing and renewing payment system, what we should be all looking at. Let's start with the landscape. I think you see a bit the complexity. Everything that is represented here on this slide is also what is on your conference agenda. I was looking a bit, at first sight, it looks complex. And for this, I need to quote a Russian dramatician when he says, in this context, entropy comes very easily. And that's exactly how it feels. And another way to say it, for all of you working in the payment industry, you have one foot on the accelerator, and that is going after customer requirements that are changing, looking at new technologies and how fast can we absorb these new technologies. And finally, the competition. Things are shaping, the world is being shaped, and you need to react fast. On the other side, you have one foot on the brakes, because you have a constraint under which you're operating. You have to implement regulatory changes. You have the economic context, which is not easy. For those of you that are in product management, trying to pass your business cases through is not always an easy game. So that doesn't always go as fast as we wish. And then there's cyber, to which I will elaborate a bit more as well, which is kind of putting a brake on how fast we will be willing to do things. How do we find our home in all of this? And I want a bit of a step back here and say, there's one positive way that I would invite you to think about it when you're looking at new payment projects. And the positive energy is around customer expectations. If you frame it around that, it is certainly the way to drive change in the industry. Expectations are changing. Mike, you spoke about real-time payments. That is a trend, mobile payments in Europe, different parts of the world. Things are changing very fast. Customers, and because of the way that we live socially as consumers ourselves, these requirements are starting to spill over into what we call the wholesale banking side as well. So corporates have increasing demands, your end customers have increasing demands, your own companies will have increasing demands. This is a caricature that we used 2 years ago, so you see the date, 2014, right? It was in one of these innovation labs that we kind of host at SWIFT. And about 2 years ago, we had a bit of that image where we see the banks being eaten up by the mobile operators, and then behind that you have the digital giants comes through, and then some things are heating up the plate on them. I have to say things have changed since 2 years ago. What I do see today is no longer that picture of a fish, a bigger fish eating a smaller fish. It is more a story about collaboration. Right. And to illustrate the point, you can take many examples, but if you take Apple Pay, because I think Apple is listed there, the Apple Pay story is an interesting one. It's one of a combination. It is, you have several stakeholders. You have Apples, you have the credit card companies, you have the banks. And they have understood that they need to collaborate. Each of them have distinctive value. When you think about the new entrants and the speed at which they can roll out technology, this is phenomenal, this is fantastic. We, and I include Swift in this picture, we're dealing with legacy. We don't have the luxury to be able to go as fast as they are going. However, we, the incumbents, we have other assets. We have the networks. We have the way we deal with regulation. We have the processing requirements. So combining these new things is where we are all going. And I hope that with all the talks we've had on blockchains and on new technologies, well, new technologies also in cybersecurity, you will see that this is not a story necessarily of throwing what you have and replace it with something new. It's a story of how can we combine things to come up with a better value proposition. So that's the story about the landscape. I'm going to go a bit fast about that one. What I want to talk about next is I want to pause on 4 things that I call game changers. If you think about future-proofing payments, I would really like that you get out of this thinking that these 4 things are really important. First is about innovation, but more importantly, how you tackle innovation. Second one, infrastructures. You don't think, we're in the payments economy is a network economy. You cannot win alone. You need an ecosystem to win, and the way you're going to be thinking about infrastructure has to be different. The third one are, what are we going to be doing about cyber threats, and what are we going to be doing about the de-risking threat? And I'm going to pause a little bit and share a bit about those 4 topics with you. Let's start the journey with infrastructure. So game changer number 1, right? It says open access, open standards. Infrastructure is going to be fundamental in the way that you're going to be rolling out your new payment systems. Simply the requirements to execute, to provide the automation level, the trust level behind that. You have to rely on infrastructures that are not necessarily limited to the infrastructures you have in your own back office systems. They rely on external actors. So it's a story about collaboration. And I'd like to illustrate the point, taking as an example what is happening, what do we see on the Swift ecosystem happening, looking at Swift statistics. So what you're going to see here is, let's take about the first row. Right? On your left side, so you're on my right, you see where are commercial payments that leave Africa, where are they going? Right? And then on the right, you see who is actually clearing those payments. And it is no stranger that I highlighted for you the fact that intra-African payments are growing, and they're growing very fast. And the amount of those payments that are actually cleared, settled in the continent, is also increasing. So if you go double-click on that figure and you look at where is that growth coming from, it is coming from regional payment systems. The example that you've heard probably today on the SADC, the Cyrus system, this is where we see on the Swift traffic a lot of the growth coming. So it's going to be fundamental that these infrastructures are part of what the future landscape will be. But these infrastructures as well have to evolve. And that's what I want to show next. What are the currencies that are being used when you look at cross-border payments across the continent? And it is no surprise to you that the US dollar is leading the pack, that you do have the euro currency right behind, and that the South African rand is gaining share. If I spoke to you about Cyrus, and the fact that it is capturing payments, you see this reflected in the stats. But one thing to notice here is also the drop of the US dollar. This is not only a positive story, because when you look really carefully at the data behind it, Some of it is attributable to the de-risking factor that I'm going to talk to you about later. So some of financial institutions are being excluded from the capabilities to clear on the US dollar, and that's something that we need to consider when we think about future-proofing payments. What else do we hear from the infrastructure space? A lot of the words. So speaking to professionals like you, the challenges you often have is how do I deal with legacy requirements? How do I go on a double speed world? So you hear the real-time payments context. Infrastructures are required to run faster and faster. And this is taking into consideration all the regulatory requirements that they must also fulfill. Where I come from in Europe, there's a very big push by the central banks to implement instant payments. So having same day, or within seconds, availability of funds to the end customer. And this is not clearing and then settling later. This is same day funds that can be used immediately by the end consumer or by the end corporate. And this requires that we run our machine faster and faster. And bringing those machines to 24/7 is a complete different ballgame. Right? You cannot have the same downtime that you used to have. If you have a case of a break, or of a fraud, or of a suspicion, the speed and the process you have to put behind to implement this is completely different. Right? So I will insist, I could dwell on many other actors, on the ISO 20022 move. Many of the new projects are being based on these new standards. So when you're thinking about your new technologies, whether it is in the mobile space, low value, high value, ISO 20022 is the reference. And I know that in South Africa you are going through these reflection and this roadmap to get to that standard. Open APIs. This is also another very big trend. So banking today, and in some jurisdiction, there is a heavy push by regulators themselves to open the ecosystem to more players. Now it's a bit of a catch-22 because we need to make sure that everything is stable, secure, resilient. At the same time, we need to make sure that it is competitive. So going for open API banking is definitely going to be a big transformation. And I'm monitoring very closely what's happening in Europe with the PSD2 regulation, open access to accounts, whereby third parties will be able to connect into banking systems, identify their end clients, issue payments on behalf of the clients, without being your own systems that are executing the payments. So how in this context do you deal with responsibilities, liabilities, security, balancing with the fact that all the opportunities that this will give to the end clients. Lots is changing in the infrastructure level. Let me conclude these game changer points saying this one sentence. Think about the infrastructure. You don't have to build everything on your backend system. You need to collaborate when you think about the new services that you're rolling out. Game changer number 2, innovation. And here I want to make a story. I saw there was plenty of sessions on innovation. And for once, I'm not going to illustrate the blockchain one, although I'm happy to talk about blockchain if you want. I prefer to take a bit of a different approach, is to tell you about how innovation can actually come from incumbents, from SWIFT, from the bank, from existing systems. Right? So the story I'm going to tell is this one. What's the problem we're trying to solve? Right? As I was preparing for this session here, I went back to my technicians in the back. And I had a trouble with this, and it was quite slow. Every time I clicked, the slides took a few seconds to advance. And the gentleman said, he looked at me, laughed, he said, it's just like payments. Yeah, but you know, payments are a lot faster, or I hope they will become a lot faster than that. So when you look at correspondent banking, it appears to be slow. Right? It is, that this is what's happening. It's a system that's been there for a long time. Customers and regulators are pushing for faster and more transparency. Right? The second is that banks themselves, you will see, are re-evaluating the business model behind correspondent banking. I will touch on this in my next game changer. And the third one is actually the pressure about being disintermediated. So how can we innovate about that? The problem statement is clear. We know what we have to solve here. So a group of banks got together and they say, okay, together with SWIFT, they say, okay, how can we get this thing to run faster? How can we respond to these customer requirements? And we've listed here, how does the world look today? And how would we want it under this umbrella initiatives called the Global Payments Innovation Initiatives? How do we want to make it better? And what they came across doing is, okay, what we wanted is make it same day. Like, the vision is, we're going to start something pragmatic. I want to do same-day payments, cross-border. Second thing I'm going to do, keep it secure, keep it compliant. Predictable, because today I don't know when the payment is going to arrive. So I want to review my SLAs to make sure I can tell my corporate customer or my end customer when the payments will get there. And finally, I want to be able for it to be inclusive so that the network reach that I have today can be reused. And we're going to do all of this using the same standard that you use today, the same empty messages. And what we're seeing here, talking to this group of banks, is that the first bottleneck is not in the speed of running the machines. The machines are fast enough. The payment message gets there fast enough. The problem is around the processing. How do you deal with all the checks that you have to do along the chain? How do you deal with the fact that you have legacy systems that work in batch? So we're doing the innovation, flipping it the other way around. We say, let's first try to solve how to get the machines to run faster. Let's first improve the customer value proposition. What product exactly we want to give to the corporate clients. When we figure that out, then we will look at what's the best technology that we can then implement to go even further. Right. So, not here to say that one way is better than another. My key message there is when you innovate, it's the whole value chain that needs innovation. Technology is one block. And you know that well. It takes everybody along the chains to come up with a unique value proposition. What could it look like? Well, something like this. The corporate clients could go in and say, I want to execute a payment that's going to go here around 4 different banks. Right? And he could have immediate visibility of when exactly his payments will be arrived. He'll get a confirmation when the payment is actually executed. And he'll get full transparency on what that payment cost him. Because that's what we hear that is the most important and imminent requirement. Then we'll look at doing that later, even faster ways, or potentially facilitating with technologies that give you plenty of other requirements. That's what I wanted to say a little bit about innovation and the way that we do intend to approach innovation. Game changer number 3, de-risking. Now, why would we be spending all this energy in conferences, in building new payment system, if it is then to have financial exclusion? That's not the end goal. The end goal is to come up with systems that are as inclusive as possible. This is an extremely important topic when you look at global payments. Right? And one that is very dear to us. We think that by tackling this, it's going to take really a community approach. And let me try to give you a bit more insight, starting with some statistics. Now, first of all, let me say this is a global phenomenon. I choose here to show some statistics from Africa, but you will see, and in the past 6 to 12 months, the amount of papers written by the IMF, the G20, the Bank for International Settlement, you name it. Everybody is having a clear call to action here. We need to do something about de-risking. Because if it keeps going this way, then it's probably not the best way to foster global trade. And it's not what the regulation, the AML, CFT regulations, and the prudential regulation was meant to achieve. So the alarm bell is ringing. There's a decreasing number of, if you will, corridors, when you look, active corridors, where payment messages are being exchanged. This is not a problem of technology. This is not a problem about innovation. This is a real-world problem. And to tackle it, we must first try to understand really very much the causes of that de-risking. Right? And the causes fall in 2 categories. There's the regulatory drivers, and there are the business drivers. On the regulation, all of you know, that regulation on AML, CFT is becoming stricter and stricter for very good reasons. That the FATF have moved to a risk-based approach. Now, a risk-based approach may sound, it is a good thing, but it is very difficult to implement because it is applying judgment to business decisions. And you need to be very well equipped to apply the right judgment. You need to have the right facts. So risk-based does take more effort. The third one is the increasing number of fines. Fourth, all of this compliance costs are rising. So the consequence, and all of you speaking to your compliance departments know that, the consequence is that there is a perception right now of zero tolerance when it comes to financial crime compliance, which is a bit of an antithesis with the risk-based approach, which is not about zero tolerance. Business models are being reviewed in correspondent banking, right? Not because only of AML and CFT regulation. Think about the Basel regulation that are imposing capital requirements, and therefore the money on the accounts that you owe to run the correspondent banking becomes more expensive for you. So profitability is hit by the capital requirements. Profitability is being hit as well in some parts of the world by lower interest rates. So all of that is a refocus of activities. And when you speak to the global clearers, the consequence is they are become more risk averse. So understanding this is very important. It is not one factor. How do we avoid? How can we do something about it? This is the key decision that needs to happen. And it is not an easy one, because it is not because I work faster and better that I will not be de-risked. It will take a community approach. And what I try to differentiate here for you is the fact that inside your own financial institution, your own banks, there's a compliance department that has a very important responsibility. And a few of the actions are there. Put the right controls in place. Be transparent. Reduce the cost of due diligence. The business has a role as well. You have to know your business. Let me give you a few examples there. Reduce the cost of due diligence. On average, it costs for a global clearer $50,000 US a year to do a due diligence against a correspondent. That's the cost. So if you don't bring that much business to just cover that cost plus the margin, and I'm not talking about the operational cost. I mean, imagine on which kind of list you will be ending up. So in the past, the attention is, okay, I'll wait for you to ask me things and then I'll answer. Well, we are no longer in a world where you have to wait to be asked for due diligence. We need to be proactive. We need to lower the cost at an industry level for doing this type of business. Second, on the business engagement, you need to know your business. You can no longer say, oh, I didn't know those transactions were flowing through my processes. Analytics, and I'll talk to you about that, is becoming more and more important in the way that you will run your business. Last layer, last but not least, very important, community engagements. To fight de-risking, it cannot be only a single bank approach. It has to take a community approach. Right? And this is what is happening in some countries. There's some good example on how Mexico is tackling this, and several parts of the world where the public sector is collaborating with the private sector to address the risk. That was game changer number 3. Okay, this is very quiet time. Now I'm sure you're gonna smile because I'm from Swift and I need to talk about cyber resilience. Right? There's no more. Finish the time where I could do payment conferences and talking about other things. We must talk about cyber. You have probably heard a lot about the recent cases of fraud that have happened involving transaction flowing over the SWIFT network. So no surprise to you that I want to put this as a game changer when you think forward. So what do I want to do here is 2 things. Is put things in context, show you the importance of it, and tell you what is SWIFT doing about it, with the perspective that you can take this and probably apply a lot of it to other systems and areas with which you operate. Well, first, a little bit of piece of context. This is a chart that I found extremely interesting because it tells me how cyber has moved from something that you could probably put as part of a business case. I mean, remember the days when I started my career in payments and you worked in the credit card business. You had a line that was called fraud, and you can probably manage the business knowing how much money that you probably would be losing. Right? The day of today is different. the cyber threat has grown to a level that it can be considered a disruptive event for a particular institution. And possibly we're aiming at something that is as far as destructive when you look at some of the investment that are probably being made by even some nations to go about disrupting the business of others, the economies. So this is a phenomenon, and it will keep us busy, at least I think, for the rest of my career. What is SWIFT doing about this? I think a few things here. We want to be more proactive. So securing your own environment is something that all of you do on a daily basis. You have received a set of, you have some professionals working on it, you secure your perimeter, it's your responsibility. But it is no longer sufficient today to rely on just a set of guidelines and make sure that you run your checks to make sure that you're protected. The key message I want to bring here today is this is going to take every one of you's involvement. And I assume that in this room there are a lot of business people as well as probably people from operation. And this is something that is going to be more and more front-end to your business. So what we're putting in place at SWIFT is a program, what we call a customer security program. We have started a serious investment in this area. It is not only about technology. It is about helping our customers, helping the community raise their level of defense against cyber threats. And how do we do that is with several axes. The first one is information sharing. If you want to defend well against threats, we need to have a way to fastly communicate, at least to those that are involved in the detection of the fraud, to help them protect quickly, and share the knowledge with the rest of the community so that they can protect. The important point on that is that you need the trust to do it. The second point is about making the gears, the boxes that you do, the SWIFT-related tools in this case, make them even more intelligent to be able to detect threats. The third one is enhance the security guidelines. Make sure that you have guidelines that are no longer generic, but things that you can audit and ask, if you will, third-party certification. The fourth one is introduce pattern matching at an additional level. Not that pattern matching or transaction monitoring doesn't exist in your institution, but you need to have that also in a safe place or in a second place. Because when you look at some of the cases of fraud, the bad guys are able even to fool your own system into thinking that things are okay. So you need to have as many checkpoints as you can. And finally, it's about an ecosystem. This is something that we will tackle together with software vendors, with banks, with market infrastructures, with central banks. We need an entire ecosystem to work on. So the story around cyber is the beginning. We are at the beginning of what we think is a new world. Wholesale payments need to be protected. SWIFT being a cooperative, we feel it is integral part of our mission to address this challenge. Now, I don't know how many minutes I do have, but it's probably a good time. See if you have any questions on the 4 game changers that I talked about. Or any comments. Infrastructure, on innovation, on cyber, and on de-risking, or any other thing. I'm happy to take any questions before I try to wrap things up. Anyone? Yes, please. There's a question over here in the front.
Can I get some microphones pulled through as well for you? On the list.
No problem. Over here. Yes.
Hi there, Thierry. Just on your innovation one, so the track and trace that you've showed, so I mean that's been a huge complication, especially in the correspondent banking, to try and see where the payment is throughout the value chain. Now, showing the payment throughout the value chain and showing transparency will also expose commercial viability of these systems. Now, we say these SWIFT transactions have always been very costly. That will show the banks up in terms of where those costs are. Are you seeing pushback on that, because it really would add to the innovation in terms of how we actually track payments going forward?
Very good question. So I think the question is referred to the slide I showed before with the payment tracker, whereby if you're a corporate client and you say, okay, today I want to do this, this type of transaction, if I get the question right, you're showing everything. So that is really raising commercial discussions, probably product discussion as well, because how are we going to, you set the right frame. That's exactly what we're working on. This is, what I showed to you is the vision of where we want to go. Now, first of all, the idea here is to set a different service level. You have the standard correspondent banking track that you use, and to provide the community with the opportunity to roll out a new service level under your own rules, under your own product definition rules. What we have heard from the banks, from the working group, is probably we will not be starting with such a complex case of a very long chain, first of all. So they will be picking the corridors and the corporate customers to which to offer the product. It may not necessarily be available at the beginning for all the currencies and for all the corridors, because that would take everybody to be ready at the same time. So I think the comment you have is a very fair point. The issue is, what is the corporate client expecting? And how far can we go towards providing that predictability and cost transparency first? Can we tell you exactly that your payments to get there will cost you 20 rand, 50, whatever the number would be, and make sure that nobody along the chain picks up anything more than that? And that when the payment gets there, the supplier receives the confirmation and you can then reconcile, your client can reconcile. That's the first problem to tackle. So it's a very good one, a very good question. The way we're going to approach this again is gradual. Product definition is going to be key on how you innovate. And that links again to the point I made. You can have today the back system. Let's take, because well, we at Swift, we also, I remember we spoke last time, we spoke about blockchain. Right? So we experiment about blockchain. This all can happen around blockchain, but you still need to agree on the business requirements and the product definition set. So getting ready for something like that is something you can reuse, regardless of the underlying technology that will connect you then to the rest of the ecosystem. At least that is the way we are approaching it. I hope that answered at least the short-term part of the question. Yes, gentlemen.
Thank you. Thanks, Mark. Thank you for a very interesting presentation. I would like to latch on to your first point, improve information sharing amongst the community.
Yes.
There's a host of challenges there, and none the least being the issues of privacy legislation and ISP regulations and the communications challenge, because there's all these role players and all the country-specific, probably privacy regulations that prevent you from sharing some of the information. And then there's also the different phases of potential crime, looking at the trends when it's actually happening, and afterwards maybe looking for forensic evidence. And all of them have different role players. So I'd like to understand a bit more on how you see future in terms of treading on all these different things.
Absolutely. It's a very good point on the pillar number one of this customer security program about information sharing. Where we are at this stage, we are analyzing the different scenarios and the different constraints exactly as you mentioned them. So how do you go about protecting the system? At the same time, how do you go about respecting and respond to the different constraints about privacy? There's a few conclusions that start to come quite clearly at us as we talk to financial institutions on how we build this process. The first one, it's about trust, right? First and foremost, because if there is no trust in that system, nobody's going to share quickly enough, at least. So we want to make sure that the channel that we design is a channel whereby we can take in the information and relay it in a way that respects the trust, possibly needs it to be anonymized or not. These are the things we're evaluating, how we do that best. The second point that comes across very much is that there are many other organizations today that do a piece of that information sharing. And when we talk to the CISOs, so the Chief Information Security Officers, the goal there is not to complexify their world, is how can we link into potentially other channels that exist, whether they be regulator, driven from a specific country. And that's what we are. So we have now inventoried as much as possible the different sources of information dissemination. And we have to make a call on where do we participate and how we participate in those. And obviously the third one being, okay, once you set up a rule book, they can be local jurisdictional constraints, and we must be mindful of those and try to respect those as much as possible. So this is all being examined at the moment. I don't have the answer, but what I know is that the deadline we have set ourselves is by cycle, so that means in less than 2 months' time, to announce to you much more clarity on where we are going with each of the different 5 streams. So very soon you will hear more about it. I just wanted to tell you a bit what we're doing. So I will try to conclude my presentation at just 5 minutes it will take. In case you have other questions, I'll be staying here for the drinks and everything. And I want to conclude by the fact of saying that we are at the very beginning of a massive transformation. I mean, this is an opportunity for all of us to write a new chapter on how global payments will work. That for me is a fact. When we look at, and this is an example where the clicker is not as fast as the payment. There we go. When we look at SWIFT, how we look at the world of correspondent banking, we say that in the 1970s it was all about automation. SWIFT was created to kill the fax. That was the reality. Then it went in the next years about efficiency, volume, scale. That came the world of transaction banking. We are today in between what we call the version 3 experience banking. How do you make a richer experience when you serve your corporate clients or your institutional clients? And then moving very gradually into what I call a data-driven banking. Right? And you see that across, and we see this at SWIFT. When I look at the portfolio of new things we're doing, and one of I was visiting a bank yesterday and they had that reaction, which I thought was right. It says, wow, it's amazing. Everything you do now is around data. Yes, because knowing a lot more of what is happening will orient your decision much better. We need to know whether we talk about compliance, what is happening, whether we need to know how we respond to customer requirements. And to conclude, a bit of snippets of what I said. When you look about future of payments, global payments in particular, there's a few things I would like at least to have brought across today. Is the first one, innovation. It's a way of doing innovation. It's not necessarily about only a technology. Second is about, yes, you can innovate, but not at the expense of security and resiliency. That, for us, at least, the space in which we operate with high-value payments, we cannot afford to cut corners. The third one is about we need, as a community, to take a responsible approach on a few things. Standards takes everybody's involvement. Financial crime takes everybody's involvement. Cyber resiliency. And the last one, last but not least, think about how you partner with the infrastructures. They are quite important in the way that this system will evolve, and they are themselves evolving. And with that, I want to thank you for this invitation. It's really a pleasure for me.